Elsa.
Kevin Baart van die Suid-Afrikaanse Petroleumbedryf-vereniging kuier vanoggend saam om oor die moontlikheid van die invoer van petroleum te gesels. So good morning, Kevin. Thank you so much for joining us this morning.
And good morning to you and to your listeners.
Kevin, as industry, are South African-based refiners still committed to cleaner fuels?
Yes, we are, but it all depends what you mean by cleaner fuels. Cleaner fuels in general means it's the providing fuels which enable a Euro 5 type emission specification from tailpipes of vehicles. What that actually means is producing 10 ppm sulfur fuel, which enables that type of emission standard.
Now, for more than a decade, government and industry have been stuck on the financial recovery mechanism. So what specific intervention does SAPIA want, or has it put on the table and currently, favors?
We are in favor of a cost recovery mechanism whereby the cost of investment is refunded by a specified amount on the price of fuel at the pump. It should be pointed out that at one stage, both industry and government were in favor of such a mechanism and progressed a long way towards finalizing the details before government had second thoughts. The other thing is that a lot of people say, well, why do you in fact need this? And the reason why we need this is because fuel prices are regulated in South Africa. And for any investment to occur, a organization or a company needs to get a return on the investment. The current fuel price regulation does not provide that return. So hence we require a financial recovery mechanism.
Mm. And when last has the industry and government, I'm referring to the Department of Energy as well as Treasury, met to discuss this issue? I mean, there was much hope after 2018, but things have seemingly died down. So is this a fair assessment?
Well, we were meant to meet with the DMRE at the end of October, at the beginning of this November, excuse me. But unfortunately, that meeting had to be cancelled. So at this stage in time, we're waiting on the DMRE to actually formulate and finalize their policy. There is some murmurings from them that something will be coming to the table quite soon.
Mm-hmm. Meanwhile, industry and government, now under even tighter economic pressure due to COVID-19 and the pandemic, have been unable to break the impasse. So is it time to walk away, or what do you think will make the talks move forward in future?
Well, the fact remains that without an adequate return, industry will not invest. Remember that a lot of these companies do have international boards, and they are faced with a myriad of investment options. And those offering no return will not be funded. This was a situation both before and after the pandemic. However, the pandemic has only served to sharpen the focus. What is happening at the moment, most international oil companies are reconsidering their portfolios in the light of significant what we call demand destruction. People saw the prices of petrol and diesel collapse last year, which has occurred as a consequence of the pandemic and no demand for the fuel. And there's a huge refocus by these international oil companies to now become international energy companies and to become net zero by 2050. That's in terms of carbon emissions. So they're all refocusing their portfolios. And in the current worldwide environment where margins are now hovering around zero or a little bit more than zero, there's still a large overhang. There's too much crude in the market. There's too much product, which is depressing prices, and local investment in cleaner fuels is unlikely to occur. In the South African context, some companies may have already opted to pursue a path that minimize further refinery investments while still serving the local market with required fuels. However, there has not been any official confirmation from them on this.
Mm-hmm. Now, after such a long time, what is the current estimate it will cost to upgrade South Africa's crude oil refineries?
The figure remains at about 3.9 billion US dollars. That was an estimate done at the end of 2018, which at around 15 Rand to the dollar equates to about 60 billion Rand. I know a lot of people in the past have quoted 40 billion, but that was when the exchange rate was around about 8 or 9 to the dollar, which is just reflective of the declining Rand relative to major international currencies.
Mm-hmm. Kevin, we'll get to the rest of the questions after the news.
As jy R375,000 het wat jy in jou kattebak versteek, voer petrol en diesel in, Elsa.
Dankie Jornay. Dis ek kan nie besluit is dit goeie of slegte raad nie, maar ons sal later daaroor debatteer. Kevin Baart van die Suid-Afrikaanse Petroleumbedryf-vereniging kuier vanoggend saam om oor die moontlikheid van die invoer van petroleum te gesels. So Kevin, thanks again for joining us. I would like to ask how much money has the industry invested in cleaner fuels upgrades in the last 5 years since 2015 to 2020?
Well, the last major investment for cleaner fuels was back in 2006, 2005, 2006, when we implemented Clean Fuels 1. Clean Fuels 1 took the diesel sulfur down to 500. Since then, the market has in fact changed in favor of lower and lower sulfur fuels, such that I believe all the refineries today are making diesel with a sulfur content of less than 50 ppm. Now, in order to do that, some investment would have occurred, but the exact amount we actually don't know.
Okay, and how much refined products and crude oil does South Africa import currently, and are we able to meet the future demand?
Well, 2020 was a bit of a difficult year, and the proper figures aren't out at this stage in time. But in 2019, we consumed about 10.8 billion litres of petrol, of which about 10.3 billion litres was manufactured locally. So a small amount of petrol was produced. And in terms of petrol, we more or less balanced. As with respect to diesel, we consumed, I think it was roughly almost 13 billion litres, of which only 9 billion was locally produced. That means we import about 30% of our diesel requirements. Now, that was for 2019. Now, for 2020, we do have some preliminary figures which show that petrol consumption was about 15% off from 2019. But diesel consumption was more or less the same as 2019. Now, with the refineries having gone down due to the lack of demand in April and May of last year, that would have meant we would have consumed a lot more diesel than what prior years have shown. But we do have at this stage in time the import capacity to do that, so there should not be a problem with meeting supply. With respect to crude oil, we import about 20 to 22 million tonnes a year of crude, and a total refining capacity of about 22 million tonnes per year.
And can we give a percentage rate of increasing demand?
It's quite interesting. Diesel is generally directly related to GDP growth. And we've seen since 2010 that diesel consumption has been marginally flat. I say marginally flat because we obviously had Eskom, which has been consuming quite a lot of diesel. But if you remove Eskom from the figures, it will show a flat demand, which is indicative of the poor economy. Petrol has been actually slightly declining over the time period. But one of the big reasons why petrol is declining is not so much that there's fewer cars on the road, is that the cars are in fact getting more efficient and consuming less on a litre per 100 kilometre basis.
And then lastly, Kevin, have any of the 6 refinery operators, including the main 4 crude oil plants, indicated an intention to close down their facility or facilities?
There are rumours in the marketplace, but there hasn't been any official announcement from any of these operators. So I can't comment further on that.
Okay. Well, thank you so much for joining us this morning and for sharing your insight. Dit was dan Kevin Baart van die Suid-Afrikaanse Petroleumbedryf-vereniging wat vanoggend saam gekuier het.